Here is why crypto is a terrible investment. If you've been around my channel, you know that I love crypto and I dedicate a major portion of my portfolio to it. But that doesn't actually mean it's a good investment. While in my opinion, crypto is a terrible long-term investment, it is one of the best assets for trading. Investing is when you put money into something and expect it to grow, while trading is essentially buying low and selling high and making the profit in between. The reasons crypto is so good for trading actually somewhat make it bad for a long-term investment, but it's not completely bad. Now let's dive into the reasons why crypto might not be an ideal long-term investment. First is volatility. Cryptocurrencies are notorious for their price volatility. Prices can swing wildly in a short period, making it challenging for long-term investors to manage risk. Even if you believe that short-term volatility in the crypto market doesn't matter and the price of crypto will increase over time, that doesn't actually matter that much. Let's say you're in your 60s or 70s and you want to cash out on your investments. But another crypto winter like the one we had in 2021 just hit. You could lose up to 50 to 60% of your portfolio and you have no guarantee of the crypto market coming back. And for those who've heard the phrase, stocks always go up, that might not necessarily apply to the crypto market. There's just too much uncertainty and risk with crypto due to its volatility, which makes it a terrible long-term investment. However, this exact reason is also why crypto is so good for trading. Unlike long-term investing, trading allows you to capitalize on the short-term volatility of the asset. Skilled traders can predict both the upwards and downwards momentum that the crypto market is taking and make a profit from that. They can implement different strategies such as day trading and swing trading to capitalize on how volatile the crypto is. Trading also allows for better risk management in general. Traders can set up stop-loss orders and implement other risk mitigation strategies to protect their capital in the face of sudden change. And finally, trading also provides the opportunity for short-term gains. Successful short-term traders can make profit without being exposed to the long-term uncertainties of the market. Regardless of where the price of crypto might end up in a couple of years, trading this asset will surely be more beneficial than holding on for dear life. And if you're curious about other crypto trading strategies, you can check out the video here. Now, the second reason why crypto is a terrible long-term investment are the unknowns. There's just too much uncertainty with crypto, and with uncertainty comes added risk. I'm just going to touch on the three major unknowns in this video, but there are many more. Now, the first one is crypto's rate of return. Unlike the stock market, which has an estimated 8% return annually, crypto's ROI is relatively unknown, which may in part be due to its volatility. A lack of data and credibility also contributes to its uncertainty, so this asset might not be a good long-term investment. Now, the second major unknown with crypto is technological innovation and evolution. Crypto is a technology and is constantly adapting and growing. Newer technologies might make a couple dozens of different cryptos completely obsolete. And even the king of crypto, Bitcoin, has relatively old technology and is carried by market sentiment. Or take Ethereum, for example, known as the king of smart contracts. Although its development team has consistently made great updates to this crypto, no one knows whether this technology will become obsolete as well. It is difficult to predict how crypto will evolve in the future, or even if which cryptos will be valued in the future, making it a bad long-term investment. And the final major unknown with crypto is adoption and integration. Although some countries have been pushing to make Bitcoin into a payment method, it is still unclear whether the economic future will actually use this non-physically backed currency for real-world transactions. This, combined with many regulatory issues that faces cryptocurrencies, makes it even harder for this asset to be adopted and integrated into the economy. And that uncertainty questions the long-term value of investing in crypto. And finally is security concerns. Security breaches and hacks are not uncommon in the crypto world, and investors risk losing their assets due to vulnerabilities in exchanges or wallet services. Hackers stole $400 million of crypto in the first 3 months of 2023. And what's really crazy is that security experts celebrated that number because it's 70% less than what was stolen in the first 3 months of 2022. Stealing millions from a traditional bank or stockbroker is almost completely unthinkable, but it happens in crypto all the time. These hacks puts into question the security and how safe investing in this asset actually is. Even if cryptos have insane long-term returns, having your portfolio completely wiped out by hackers is another issue entirely. Outside of the questionable safety of these wallets and exchanges, the lack of regulations of crypto also creates security concerns. Crypto crackdowns in the US have shed light on some of the limitations of crypto and its safety. And not being able to invest and safely keep your investment over time definitely creates long-term issues. Moreover, there are thousands of different cryptocurrencies out there, and some of them might be scams and not in the way you think. many crypto developers get greedy and immediately liquidate their assets after the cryptocurrency has gone public, not only resulting in the crypto completely crashing, but also resulting in the crypto becoming completely obsolete as well. They sell their cryptocurrencies for a profit and never touch it again, which is also why I believe that crypto airdrops are not worth it. But that's a completely different topic. Basically, the security concerns with cryptocurrencies boils down the question to this. Do you invest in the big cap cryptos such as Bitcoin or Ethereum in the hopes that they don't become obsolete one day, or that they will have economic use and be carried by market sentiments? Or you invest in the small cap cryptos or completely new cryptocurrencies in the hopes that they will one day bring massive returns and are not scams? If you still don't believe me on the concerns with cryptocurrencies, just Google FTX. Anyways, these are the major reasons why I believe crypto is a terrible investment. Volatility, unknowns, and security concerns all make crypto a very risky long-term investment. But despite all of this, there's still actually some benefit to adding cryptocurrencies as a small portion to your portfolio. Diversification would be the first biggest benefit. Many believe that cryptocurrencies provide positive diversification effects, especially against rising inflation. Moreover, because cryptos are a completely different asset class when compared to the stock market and the real estate market, that allows the crypto market's prices to not be directly affected by the stock market. Even if the stock market is crashing, the crypto market could be doing completely fine on its own. Because there are no ties directly connecting these markets, that means this is a great diversification to your overall portfolio to reduce your overall risk. However, keep in mind that this doesn't make cryptocurrencies themselves any less risky as a long-term investment, but just adding this asset class to your portfolio does diversify your assets, allowing you to reduce your risk. At the end of the day, cryptocurrencies are just another asset that you can add to bolster your portfolio. Another reason why you might want to invest in cryptocurrencies is due to the potential for major returns. Because the cryptocurrency market is relatively new compared to the other markets, that means there is also potential for insane returns. There are potentially more changes coming down the line that allows cryptocurrency to have real-world value and can be used in real-world transactions, making investing in these cryptocurrencies even more attractive for some investors. Examples are stablecoins, which are cryptocurrencies that are linked to the value of a fiat currency to back the digital currency. Moreover, there are also more regulations coming on the crypto market, which not only improves the security and safety of cryptocurrencies, but also protects the investors from risk. Overall, while crypto might still be a bad long-term investment, you have to understand the benefits that cryptos would provide to your portfolio and determine for yourself whether you want to add this asset to your portfolio or not. In my opinion, although I do invest a small portion of my portfolio to cryptocurrencies, the majority of crypto that I interact with are being traded on a day-to-day or week-to-week basis, which I believe is the better alternative than long-term investing for this asset. In conclusion, while long-term investing in cryptocurrencies may not be the best idea, there's no reason to stay completely away from this asset. As I said earlier, after all, it is just another asset that can be used to enhance the strength of your portfolio if done properly. This video isn't meant to scare you away from this amazing asset either, as there are many financial benefits that crypto can provide, such as volatility for trading. However, long-term investing just might not be one of those benefits. You should analyze your own portfolio and know your own risk levels and determine whether cryptocurrencies are a good investment for you or not. And if you're interested in learning more about how you can use cryptos to your advantage to grow your financial wealth, make sure to subscribe and check out the other videos on my channel. Anyways, until next time, happy trading.